Hi everybody, it's Mark here at Tesla, and Tesla closed slightly green today. The closing price was $258.08. That's a share price increase of $1.18. In percentage terms, it's 0.46%. And Tesla kind of did what we thought it might do. I think the obvious resistance at $260, which is a very popular strike. And I kind of tweeted about it this morning when the market opened, and I just started seeing kind of that a lot of interest and a lot of volume again on the 260 strike. And what's basically happening is there's no way they're going to pay it out, and not until maybe, okay, let's say tomorrow is decent. They're going to want to try to scare people out of those 260 strikes, and maybe they'll kind of keep it flat for a while and make people second guess if it's going to dip under 260, and they might want to close it out at the first opportune moment they have to get some profit out of it, or at least not to lose too much money from the very volatile options on a day of expiry. So you saw us peak above the 260 at the end of the day, and it quickly sold off. And it sold off with the rest of the market. So the rest of the market had a very kind of weak close. So I would say that really sharp upwards thrust through 260 was met with a lot of selling that made it look a lot more drastic and compared to other ticker sell-offs at the end of the day today. But it's because it had that little upwards thrust. And number one, that could be not a great sign, meaning that that upwards thrust is kind of like the final sign of a top. You might see that in some Wyckoff patterns where you see like a UTAD, which is like it's an upward thrust after distribution. And that means that a stock will consolidate for some X amount of time at some X time frame. And the final move before the moves start going lower is it's a quick thrust through resistance and a very sharp sell-off thereafter. Now, it's really hard to separate for the fact that every ticker did this. So is every ticker in distribution? I'm not really sure about that because we've had some really good earnings over the past couple of days. CrowdStrike and Okta. So the cybersecurity stuff did really well. Today, Dell posted a really, really nice beat along with, I think, Salesforce from yesterday. So there's some stocks that are doing really well in this environment. And so it's really hard to say if there's going to be some kind of, further downside from here. But I think what might give you a clue and give everyone a clue is how the jobs report for tomorrow, which will be coming out before the market open, will kind of be perceived and read by the market, because we know from the previous economic data drops that we've had this week is that when the news is kind of bad, the stocks in the overall market does good. And it's because it's kind of pointing to the fact that, I think all the monetary policy and the rate hikes that we've been experiencing over the past year and a half are finally working. Jobs openings are coming down a lot. The ADP payroll report missed. And what if non-farm payrolls tomorrow misses as well? You kind of get the idea that, okay, we accomplished what Jerome Powell wanted to accomplish, which was the softening of a labor market. Now, things were kind of murky today because today was the PCE, the inflation report that the Fed likes a lot, especially the core PCE reading. And we can kind of take a look at that now. Let's go over to the browser and take a look at some things first, some news, and then we'll get back to the chart. So the first bit of news that isn't the PCE stuff is going to be the only Tesla-related news that I might be talking about today, and that is there's a lot of rumors and there's a lot of chatter about tonight. So maybe if you're reading this, you'll have better clarity than I will. I'm recording this at 3:30 Pacific time on the 31st of August. And there's a lot of rumors that have been going on since about, two or 3 days ago, or even last week when it comes to the idea that there's going to be some reveal in China that the new Model 3, quote unquote, Highland, which is the refreshed Model 3, is going to be available or at least debuted in China tonight, which would be China's Friday morning. And so basically, I would say keep an eye out for that. If you see some weird price action towards the close of the after hours trading today, it could be associated with that. So feel free to check Twitter check the news to see if you have any full official reveals of the Model 3 Highland. Now, this is a Tesla Chan account on Twitter. He likes to post a lot of stuff about rumors coming out of Shanghai, and he also follows the Korean market for Tesla as well. Now he's showing you the possibility of maybe we're seeing some official renders of the Model 3 redesign. And the reason for that is he thinks it might be real because it's how it's being portrayed to you. It's almost like this is promotional material underneath glass, maybe mounted in a frame, ready for a presentation, ready for some type of debut party for the Model 3 Highland. You can see that in the reflection. You can see obviously someone is taking a picture and it's being reflected over glass. You can also see that the printing kind of pixelation on the photograph. So it's very possible that this could be promotional material for the Model 3 Highland, and it could also just be these might just be like computer renderings. So it kind of has that look to it, maybe too clean of a look, and everything's too even, the shadows are too even. But anyways, this could be a catalyst for Tesla. The type of catalyst that this could be, it's like, okay, yeah, I mean, every car manufacturer refreshes their cars. It's not like just because there's a new like Bronco doesn't mean GM stock is going to go up 10%. What we want to focus on is that, okay, we have a refreshed model, but what's going to make this different? We already know that the Model 3s in the inventory now are really heavily discounted. I think they were further discounted last night. And that's possibly because everything in inventory, they want to sell as quickly as possible. So when they announce the new Model 3, that they're not going to get what the Osborne effect, which is that you cannibalize your own sales because people are delaying their purchase for a new version. So you need to incentivize them to purchase one of the older Model 3s, and they can get them at a pretty nice discount, considering that they get the full federal rebate from the IRA on that purchase, along with any state incentives they have. Now, it kind of begs the question, though, is a lot of people are saying the catalyst is not the refresh Model 3, but what the refresh Model 3 is going to cost. And they think that this is going to be thousands of dollars cheaper due to cost-saving manufacturing methods than the current Model 3. It kind of puts Tesla in a bind, though, because if the car is going to be in the low 30s, let's say, and let's say it gets some thousands of dollars in rebates, it's going to be well below the price of the current Model 3. I think you will create a lot of animosity with the current Model 3 purchasers, especially recent purchasers, that they've already, think about all the people that were buying Teslas before January of this year, and come January in the thousands and thousands of dollars in price reductions on the Model 3s and the Model Ys and the Model S's and S's, even as that it kind of gets to the idea that, do you really want to piss people off and say, okay, we have this new Model 3, it looks cooler than the one you just bought, and it's thousands of dollars cheaper, right? I think what is the retail, what is the going rate on a Model 3 right now, the cheapest configuration? I believe it's like $37,000 flat. So are you telling me that they're going to come out with a Model 3 that's $30,000? And in the sense of, if it's getting the gigacastings, yeah, I mean, maybe you can save a couple $1,000s, but at the same time, no one has seen a new gigapress being delivered. Like, these things are massive, right? They're gonna be on a boat, and they're gonna be trucked and in a big box and slowly moved into a factory, and no one has seen a gigapress come in to Shanghai or to Berlin or anywhere for that fact, other than, of course, the Cybertruck delivery of the Idra gigapress. So it kind of begs the question: is there really like that much cost savings in this refreshed form, the gigapress? Like, if this thing is casted, I'd be super surprised that no one that watches the factories for Tesla, they probably watch it 24/7. I'll be surprised if no one saw the delivery of the gigapress. Now, I do understand that the gigapress would be smaller than the Cybertruck one, so maybe it is a little bit easier to hide and disguise. But I think we have astute factory watchers in the Tesla community that would have seen it. But if there's a gigacast in this car, front and back, I'll be completely surprised. Now, it kind of does. There is a need, though, for some type of considerable manufacturing cost savings that can be passed on to consumer for this car, because the Model Y and the Model 3, they really need to have a bigger price difference to really motivate, especially U.S. purchasers, U.S. customers, to go with the Model 3 over the Model Y, because what's the point to buy? Because in America, it's definitely an SUV market, it's definitely a crossover market, it's definitely a pickup truck market, where I understand in other regions that cars are more preferable. I get that completely, but you can sell this car to a lot of people who were never thinking about buying a Tesla in the first place if you can make it, yes, more affordable, but you just don't want to be disingenuous to people who have just purchased a car with an older look and like maybe less performance, less efficiency just a couple days ago, right? So keep an eye out for this. If we see any wide fluctuations in Tesla's pricing while we're making this video, we could probably attribute it to this possible news. Now, let's look over to the news that our friend Nick Timrose, he was discussing. He always likes to talk about these really important inflation figures. And so Core PCE came in at 4.2%, which is in line with our expectations. But I highlighted some things in his tweets. We're seeing core services ex housing at 4.7%. This is the highest since February of this year. So we're seeing that accelerate, and you can see it in this chart. Core PC ticked up. Everyone was kind of expecting that. That's not surprising. What we're seeing is a really nice and kind of deflation on core goods, and we're seeing the kind of a very slow deflation or disinflation on housing costs. So that's a good thing, but they're really not markedly. Housing is not dropping as fast as you really want it to. But then again, when it comes to the real estate market, there just isn't enough supply, and the rates are too expensive. So people are not really they're not moving around, getting their previous house on the market. So housing is going to come down slowly, and shelter is actually doing okay as well when it comes to like the cost to rent. Now, let's see if we can find this here. I think it's maybe up in his tweets, if I can find it for you guys. So we saw that just bear with me, it's somewhere here. Okay. So it's the year over year regular headline PC inflation is 3.3%. And I just mentioned that the core CP was, or PCE was 4.2%. So they're both in line with expectations. Now, you guys remember last week when people were talking about Jerome Powell's speech at Jackson Hole, and he was talking about what he was seeing inflation come at. I just wanted to highlight that in the speech. So this is this is basically the written version of the speech that he did on last Friday, and he mentioned that he saw headline inflation year over year at 3.3% for July, and he saw the core at 4.3% in July. So he was pretty close. So he kind of understood the numbers he was seeing, and because of that, everyone was expecting this. I mean, there was a lot of analysts who had the 4.3%, the 4.3% for core PCE, just because that's what Jerome Powell saw. He was literally saying he saw the numbers for July, and these are what they are. So the market didn't really have a strong reaction to the inflation report when it dropped. So you probably, if you were watching at 8:30, you maybe saw it move down like what, 0.1%, maybe waffled a little bit, sold off a little bit more, but the swings weren't necessarily amazing. Like it's not the type of swings we had last year when we were being surprised with really, really high inflation over and over again. But what's really concerning for him, and he made mention it, and he talked about it a lot in this speech, was this is his words exactly, given the size of the sector, some further progress here will be essential to restoring price stability. In the sector that he's talking about is core services ex housing. Now, core services ex housing would be like food, transportation, those type of services. And let's see if we can find where he was talking about the core services. But he was thinking that it would come down with the fact that monetary policy is a little bit lagging, and that when core services will come down with time, and it would bring back what he calls, balance to that sector. Let me see if I can find it here for you. So in the final category, non-housing services, it accounts for over half of the core PCE index. And we're seeing it also account for basically all of the increase in the core PCE as well. A softening labor market is going to affect this category the most. And so if we see softness in the non-farm payrolls tomorrow morning, I think the market will take that as a good sign, because we just got hit with one of the biggest increases for year over year on non-housing services. If we can see labor come in again, so if we can have confirmation tomorrow about the possibility of a softening labor market, because we've seen it over and over again this week. We also saw continuing claims ticking a little bit higher for the unemployed. So we're seeing a lot of job softening. We're seeing openings come down and jobs not being employment not being as high on a month-over-month basis. So if we can continue to see that, that's going to be really, really good. So let's look at the data that's going to come out tomorrow. We're going to have non-farm payrolls at 8:30, so that's the one that's going to be really important. But all of this really, really matters, because hourly wages is still very strong. Like they're anticipating hourly wages being 4.4% year over year. Hourly wages on a month over month, they're still seeing increases, because the tightness of the labor market is making employers have to pay more, or giving people that mobility to move between jobs to get more money. But okay, so what do we want to see? We want to see a non-farm payrolls miss by a couple percent. We want to see like 167,000 jobs. Now you got to be careful here, because you don't want. So when we're this week, okay, we're in the week of what, where good news is bad news and bad news is good news. So if there's bad news in non-farm payrolls, the market's going to perceive it as what? Good. And we see that over and over again, right? What we got to be really careful about is you don't want numbers to miss so much that when the creation of jobs is just like halved of what their expectations are. Like you don't want to start trending from bad news is good news to bad news is recessionary news, because we've had a couple of weeks of that where it's, where you're getting good data and all you're thinking is like, you're getting really bad data and all you're thinking is like a recession, right? And we had there was a different period earlier this year, like what was it, around February, where it's like all the good news, all the bad news is bad news, and all the good news is good news. So we're kind of flipping the script from like the February reports. So if we can see a slight miss, but not too much of a miss, like a couple percent on miss on non-farm payrolls, that's going to be really good. If we can get hourly wages to come in a little bit more, that's going to be really, really good news. You can even see, non-farm payrolls go in line, 170,000. Let's say it's in line with expectations. Now, to be fair, the analysts that are tracking non-farm payrolls and ADP payrolls, they're awful. They're not good at it. They've never been good at it. They miss over and over again for months and months and years and years. So let's say though we are at in line. Let's say we're at like a high 169, 170. That's fine. But if you see what unemployment rate tick up to like 3.6%, if you see hourly wages go flat, if you see wages year over year come in like 4.2, 4.3, I think if you can see those pieces of data, leaving non-farm payrolls number in line with expectations, a tick up in unemployment, but you don't want 0.2%, because 0.2%, a lot of people think that is a little bit too much, and a couple months of 0.2% will signal a recession. How about 3.6? And keep the numbers of the job creation in line with expectation. You're going to have PMI, you're going to have ISM. So you're going to see a lot of volatility throughout the early morning, also with Loretta Messer speaking right after the market opens. So you're going to have a lot coming at you. I would be really careful, because when it comes to Friday trading, it really just centers around meeting the quote unquote max pain, basically getting everything to a strike price, which benefits the sellers of options the most. So you might not really find a great trade after an initial move. So you might have some early moves, but then the market might trade flat or actually sell to get to a point where, options work out best for them. So I like to look at Fridays as almost like a non-trade day. I like to set up a trade going into next week, even for next Friday, not even for this Friday, but a trade for next Friday. because I'm really not interested in trying to chase something on a day that's going to mess with you a lot. It could be a quick move in the morning and then nothing for the rest of the day, like nothing, and your options are just being destroyed. And you just have to understand, like, you need to get out of a trade sooner rather than later, and only look for those really opportune trades where it's like, okay, yeah, we're down like 1%. Maybe I'll go a little bit long. What you want to do is look at the options, and we can look at some options now. Let's just look at Max Payne while we're in the browser. We can look at Tesla, and Tesla's options are, I don't know why, man, these guys. So you can see here in this green spike, the amount of people buying $260 calls like doubled within like 2 or 3 hours. Like everyone was buying the 260s, and the 255 put floor was being put in, but the 260s was going crazy. Now we all know, and we've been talking about this for a couple of days, that the 260 is going to be really difficult for us. We saw the peak of pricing today, and that was a quick rejection from over 260 right down into what, a $3 loss or something like that from that point. So the exuberance for the 260 calls is really going to set us up for maybe just a nothing. If we open flat tomorrow, there really might not be a lot of upside, because what we're playing with between the 257.50 calls and the 260 calls, maybe we end up there, right? Like there's a lot of puts underneath 250, so we can even get to lower 250s. You can sell off 1 or 2% and still kill a lot of puts. But of course, like I said, the 255s, we're building up a lot. So maybe Max Payne anywhere from the 256 area to 257. So just be careful there. Like if you see a nice opportunity, just make sure it's an obvious opportunity and you can take advantage of it really quick. It might not be there for that long to take advantage of. Hopefully we still have our calls that we sold for when we hit 260 a couple days ago, because as you can see, the 260 has been that resistance, and we need to see how this is going to evolve tomorrow. So keep an eye on this, see if there's any other open interest on some other strike. Let's say the 265 start going really hard. That could mean that the open will be pretty bullish. If you see the red and green evening out, then they're going to fight over a tight range between those two peaks, between maybe 255 and 257, something like that. So hopefully we're not at that point. Hopefully we're above 260. Can we be above 260? Maybe the Model 3 news would be great, but those are just possible, just rumors. Let's go back to the charts. So looking at the charts, I went ahead before I started the video. I just drew a simple ascending triangle. Now we know we broke out of a larger time frame triangle, and it was pretty obvious. So you made higher lows and you had some equal highs, and then finally you had a strong break. The strong break would have to be a really interesting set of data coming out tomorrow morning that leads everyone to the idea that interest rates are done, just done. No more November rate. If we can see the Fed funds rate bets for November come in to like 75% for a pause, then you're going to have a crazy rally within the next couple of days. But we do have a holiday on Monday. So if you're not an American, we're going to have a long holiday. Labor Day is going to be next Monday. So it's a 3-day weekend. And a lot of people do not like to hold their trades over 3-day weekends because it exposes them to a lot of risk. And if they're options traders, they don't want to be holding options because it's a 3-day plus, over 3 days of this theta destruction. So the move, like if you buy options on Friday for Tuesday, you're going to have a big move just to break even. So it's not a great, tomorrow might not be the greatest of trades. Just want to let you guys know. So sometimes it might be even better to be a little bit more hands off, or just be very protective of your holdings, and that could be the type of trade that you want to do. Just kind of preventing downside when it's obvious. Like if you see a nice spike to 262, that's a great short, right? Because I say that, but obviously that's not financial advice. And also at the same time, if it is at 262, it could keep going up because maybe it's at 262 for a good ADP report, or I'm sorry, a good non-farm payroll report, or because the Model 3 Highland came out. So just kind of keep that in mind. But I always like to find shorts at those, the increments that are basically the strikes for Tesla calls and Tesla puts. And but we're seeing a very similar pattern. What are we seeing? And this is very, very obvious. You see the pull, and then you have our triangle shape, and it's ascending, right? Because it's pushing up against a level, it's pushing against 260 over and over and over again. And at the minute time frame, we've seen many touches. We've seen 1, 2, 3, 4, you can say maybe 5 around that 260 mark, and we've been making lower lows consistently. Now, I drew this green line earlier in the week thinking that, we'd go up, and we did. We hit 260, we sell off. Now, the sell-off wasn't as severe. We actually kind of stayed in the range that we highlighted from earlier in this week, which was the consolidation area for the time that it sold off from the earnings report in July. So you found the bottom here. There's a lot of interest here. You found a lot of buying, and now we're basically either turning that previous support into our new resistance, or hopefully we can break through and create a floor on 260 and bounce off that maybe for a couple days, and that'll be really nice. But it's been a good run. I just want to put things in perspective. We sold off pretty hard from earnings, and I understand that, and I feel that, but we are about, this move is 2 weeks and 20%. So, can we complain? I don't know if we can. What I always say to that is when people say like, oh, Tesla went up a lot in the past couple of days or the past couple of weeks, I always say like, Apple's at like an all-time high. Microsoft and Meta, they're all knocking on all-time highs. Google's knocking on an all-time high. Nvidia's 3,000% over their previous all-time high. And Tesla's down 40%, 50%. I don't know what it is. It's a lot of percent. I always say it like that. It's like, okay, so, you have all this revenue. You're selling millions of cars. You have new models coming out, and we're down 40% from our all-time high. We have market share all across the world. Tesla is the best-selling vehicle when in regards to the Model Y, and the Model 3 is rivaling almost every other manufacturer's cars. I don't know. That's what I say to that. So if anyone says to you, you had a good couple weeks, so we had a bad couple years. So take that. But so we're in that triangle, but now we're getting pretty compressed. Now in our previous triangle, we didn't compress all that much. We had a break and we settled kind of on the top end of that triangle. We dipped a little bit and broke out. Now we're getting really tight here. So this tightness, this compression could be rather explosive in one direction or the other. So when you get to this point, now yes, I know it can honestly just keep pushing against it, but you can't keep pushing against a level and it just do that for days and days and it'd be okay, right? Maybe that's fine on the SPY, on the index, maybe that's fine on QQQ, but Tesla's going to get exhausted. The buying will get exhausted, or the selling will get exhausted really quick. And so the move can be pretty drastic. We know though that the 260s are really, really strong. So you got to wonder that, by tomorrow, which is the 5th, sorry, not 5th, but the 5th on this chart will mark the end of the price action tomorrow, which is right here on my cursor, that it could settle at that 260 or just above or below it, depending on how the market's positioned, leaving a really big move to follow. So we can stay in this kind of compressed pattern if this is a real ascending triangle. We can stay in this compressed pattern for just tomorrow, basically, and let the move happen at that point. It could consolidate. I'm not saying it can't, but this is a lot of pushing, and there is a lot of resistance there. Now, there's not a lot of wicks. The wicks are fine, but this last one that we had in the last couple of minutes of today was very quick. That was very drastic. But so we closed at the bottom of this triangle. What do we want to see? Obviously, we want to see up. Let us draw. Maybe we can kind of just do this, and this would be maybe what the market does. Basically, stays near the 260 after getting a little bit of bullishness in the morning. Maybe that'll get people to go long, but maybe you just consolidate on the 260 because there's so many calls there. Now, like I said, the options can evolve very quickly on the day of expiry because the options are much cheaper. So you can get into that play for much less than you are even today. And also there's going to be more news tomorrow that can affect how the pricing is going to be. Like if we gap up, then what happens when you gap up? the open would be they're going to try to sell it as hard as they can to get it under 260 so they can close out these options. Now, remember, they don't have to. The people that own these options or sold these options, they don't have to sit on them until expiry. They can close them out given the best opportunity for themselves. So let's say like you get a gap up and that ADP was okay, or the Model 3 Highland came out and everyone's all bullish, but we know what happens when gaps up, it sells off, obviously. But let's say you get a gap up and you're at 262. I think you might get a quick buy in the morning and then sell off to 260 and bounce off there and give people opportunity to close out their plays, and maybe you can find a bullish move that doesn't pay out the 262.50s. So stay at 262, don't pay out at 262.50. That is maybe like your best bullish move for tomorrow. And if things go really bad, like this yellow line is the previous level. So we drew some levels and they worked out really well actually for other tickers, and actually also for Tesla. Basically, just the top range and top of the range of consolidations, you found that it bounced off of that. So maybe you can, if in a worst case scenario that it sells off in the morning, that it gets down to here and bounces up to settle above 255. So it doesn't pay out the 255 puts. This is the upper EM. So the market factored in a 4% move for this week, and we're well above a 4% move, obviously, right? Can it get back to the upper EM? That would be a tall task, I think, but I guess not. That move down would be 3.5%. So it would have to be it would need to be like, so what's the expectation for payroll tomorrow? I believe it's 170,000 if I remember correctly. If you get 200,000 jobs made, it might sell off pretty hard. They don't want to see jobs made. They want to see either kind of slightly lower than expectation or just maybe an outright miss, because that might lead to cuts actually coming in this year if there's a really big miss on jobs. But you might get a scared sell in the morning if that's the case. But yeah, if you get a big jobs number, can you get back to the lower EM? Yeah, it's possible. I know we've seen Tesla moves be pretty drastic. But so just keep those levels in mind is what I really want to show you, is that, from a bullishness factor on a bull move, like if gap up, right? Like the market's going to do everything they can to get that price back down to 260. And that might be just a really sharp move in the morning. That's something you can catch by selling another call, or you can sell, you can buy a short and try to ride that. Not financial advice. It's something that I might do if that's the case. As far as like a flat open, just kind of like today was, which wasn't really a spectacular response to anything that came from the PCE report. It wasn't like what we're used to. It wasn't like, a 2% move. Then you might get a flat open and then just bounce off 260 and close below it. And here's your downside targets. Like maybe try to form base on the 248, 249, 250 area and kind of just close around there after selling off sharply. Or if you, maybe there's a bad reaction to the jobs report, but the market sees it as a buy the dip opportunity, maybe you sell off to the top of the range over here at 251, 252, and get bought back up to above 255. So if you see that type of move, you see any type of consolidation over at the 252 or the 248, maybe an opportunity to go long. Not sure, could be. But if, like I said, we're already long, right? We hold shares, so we're always long. So if you get one of these two moves up here where it's a little bit bullish or just slightly like 1%, I wouldn't go crazy trying to go long and chase anything, because look, you're already long with shares and Tesla's very volatile anyway. So yeah, that's the possible moves for tomorrow. But just know 255 looks to be the floor and 260 looks to be kind of like the ceiling of pricing. Let's look at the indicators going into the Friday move. This is on the daily time frame, so we'll just look at MACD. We'll look at RSI. So stochastic RSI looks pretty bought up, but we still have more room on RSI, and we're still on the MACD on the daily. We're curled up above, and so maybe that means more upside is ahead of us, because usually when it does curl up, like I mentioned yesterday, yeah, it kind of goes on a little run. That's what we can hope for. We can look at the S&P 500 and yeah, so this was an obvious move on the S&P 500 real quick, just for you guys. When you're trading, like when I trade Tesla or I trade other tickers, I really only look at the S&P 500. That's kind of like my only chart. It's just kind of the cleanest chart. It has a lot of volume. So this is the SPY, but you can see that these levels are really respected. So these are previous peaks in pricing, and you can see a very sharp reaction. It doesn't go above it. It actually touches it perfectly and sells off all day. So you can probably do this to yourself too. Do it on your own charts. Is that when you're getting ready for your day of trading, let's say, you don't have to do it every day. You don't have to trade every day. But let's say you're getting started for a day of trading. I would just do a quick kind of perusing of your charts and just try to find obvious levels. Like I didn't draw this level out, but if I did, you would see that previous peak in pricing served as quite a resistance and then as support for pricing that was how many days thereafter? Some 20 days thereafter. So it's almost like price has a memory, but it's more just about kind of the volume profile of things. Like there's just interest to sell here, and so it sells because that's where they wanted to sell before, 3 weeks ago. And you're seeing the same thing here. If I was to draw this line out, it's the perfect touch to there. If you get bullishness tomorrow, think about this. Like I don't know if they really want to fill the gap, right? Not before a holiday, because they're not going to be really well positioned for this. So let's just say, what percentage would that need to be? That would need to be a 0.7% move, and that can easily be done. Obviously on the SPY, even though 0.7 is a lot for the index, it can be done. But if you see any bullishness on the SPY, just know that it might stop around that 453.50 area, and then in turn, if selling starts happening on the S&P 500, Tesla might get dragged down with it because it makes up a couple 4 or 5% in the various indices. So selling at those points could bring Tesla down, even though maybe Tesla has some type of different news it's working with, like the new Model 3 or what have you. So just know it's a good idea to keep an eye on the S&P 500 or the NASDAQ, because those levels are important and can affect Tesla. Because when Tesla was selling off today, it had that kind of we'll look at it again. It had that really brief trip over 260 and sold off immediately, right? So we actually saw 261 and it sold off. But you didn't see the corresponding breakout in pricing on the S&P 500. But the S&P 500 needed to sell off because they were trying to accomplish something. I don't really think they really cared about an options expiry for the day for the S&P 500. I really think it's just they're de-risking going into two things: a long holiday weekend no one really wants to hold, and they're de-risking going to non-farm payrolls because they're not under the market's still not really sure how it's going to be perceived, and it's always in that situation of like, oh, this is good news, this is bad news, but is it good for the market, right? And that's the real question, and that's the question that sometimes they don't really have a quick answer to. And you kind of saw that with today's PCE price action. It was just kind of like meh, like kind of going nowhere, if I can find it here. So this was on the release of the report. It moved within like a 0.15% range. Is that typical? I mean, not particularly typical. So no one's gonna be. You can't really make a good guess for tomorrow. I would say just kind of limit your trading because Fridays are not that great for it, and just like I mentioned, try to limit your downside as maybe your only trade of the day. But thanks so much for listening, guys. Hopefully we do get some good news coming out of China tonight, or we just have a good day tomorrow and break out of this range. And if we run, I do want to say this: if you break over 260 and you get closes above 260, you're going to see 274, like this level within a couple days. So if we have a good macro condition tomorrow, maybe something you want to think about, that the bullishness can go on for a couple of days. We got that MACD curl up. We got still a little bit more room on the RSI. So maybe, but just know that, of course, 3-day weekends, not so great for options. Maybe this is a share thing. Maybe this is leverage shares over the options play, and kind of keep your risk. Just know your risks and have defined risks and not go too heavy because, like I said, you're already long. All right, guys. Thanks so much for listening. Have a good night.